Next, we are monitoring the U.S. stock market. The New York Stock Exchange down 381 points after a huge sell-off at the very open of the market when it was down about 1,000 points. We're still monitoring that. We're bringing in Anthony Mason to talk about all of this.
Hanging on. Hanging on
this
to the
roller
table
coaster.
here.
This is scary.
This is
for a lot of amusement park here.
So, Anthony, a lot of people are looking at this and they're saying, "Man, what should I do?" But I've been talking to a lot of analysts, a lot of financial advisors, and they say, look, if you're going to be retiring, if you're looking to put your kids to school in 10 or 15 years, sit back, take it easy, take a deep breath.
Yeah, I think that's right. I mean, if you've got a, closing on a home sale next weekend or something, and you need, cash right away, then you have to be wondering. But look, I mean, I think people have been telling this all morning. I mean, we've been on a 6-year bull market here. We've been due for a correction. This is the catalyst for a correction. I don't think this is in any way indicative of what's happening in the U.S. economy, which has been showing continuing strength and growth. And there's some actually very good signs in the U.S. economy overall. This is a reaction to what's happened in China and uncertainty in China. It's partly that the picture in China is not clear. We knew the Chinese economy was weakening. All of a sudden, it looked like maybe it was even weaker than we thought. And that's what has global markets spooked, and we're responding to that.
Can you talk about that a little bit more? Because I think it's interesting to look at China, because there's sort of this veneer of capitalism, right?
Right, yes.
But really, at the root of it is the Communist Party, which still has a hand in
controlling the
things.
economy,
right.
yeah. Well, what you had, I mean, the growth in China has been real. It started scaling. I mean, it was double digits at one point. It's gone back into around 6-7%. But there were concerns that it was continuing to weaken. The Chinese stock market had been roaring ahead, hit a high in April, and is now down more than 30% since then. But a lot of that growth was kind of inflated. There was a bubble in the market, and you're seeing that come out. When China devalued the currency, that scared everybody and suggested, wait a minute, maybe things are even worse here than we thought. And things have escalated since then.
Anthony, a lot of people had been looking to September when the Fed meets, and they were thinking that perhaps the Fed, given, as you point out, the strength of the U.S. economy, given the strength of the fundamentals of many companies here in the U.S., that perhaps the Fed were going to raise rates. Now, is it likely that they'll do that?
Well, the betting had been September. I think that's the way, it looked like that's the way things were headed. If you're the Fed now, you've got to be sitting back and going, all right, wait a second here. Are we, is this global trouble going to affect the U.S., slow down the U.S. economy? And I think they have to at least reconsider. But the Fed wants to raise rates. They think it's time. They don't want to wait too long. But this has actually got to give them pause at the moment.
Looking at individual investors, there are losers here. I mean, you alluded to it. People who need money now are the people who lose. But what you're also saying, and what I hear a lot of other analysts saying, is that there was long overdue, something that was going to happen here. I guess the question for a lot of people, how long do they have to ride things out? When a correction takes place, what is the time frame here for people?
Well, that's always the question, and the answer is nobody knows. I mean, I think what you did see this morning, in any correction, you usually look for a point where there's a certain, the word they always use is the panic. And when people start, dumping stocks because they have to, because of financial situations they're in, and they sell things they shouldn't sell because they have to sell. And that's when all of a sudden bargains appear and all of a sudden people start buying. And you may have seen that this morning when the market was down over 1,000 points, and it's come back a lot since then. The big question is going to be sort of what happens at the end of the day here. Does the comeback hold or does the market sink again, which will give you an indication of where the psychology is. There's always a sort of psychological arc in a market when it starts to go down, when all of a sudden nobody is sure what's going on and everybody starts to sell. And then people start coming in and saying, wait a second, we've gone too far here. And then the market comes back.
Anthony, given that the U.S. market has been strong, the market has been up, I'm thinking now about some of those other emerging markets that their fundamentals were not perhaps as strong as the United States, like Brazil. Does this contagion have the possibility of affecting them even more than it already has?
I think it's clearly, it has and it is. And, there had been a big pullback in a lot of emerging markets already. When you get this kind of a problem in the market, it's going to affect them even more. One thing I want to point out here domestically is, concurrent with all this is been this huge drop in oil prices, which of course is great for Americans, at the pump, and gas prices are such a huge part of the amount of cash people have to lay out every month. So this is in effect a tax cut for us, and a pretty substantial one at that. What it may indicate, however, when you see oil prices drop that much, is a concern that the global economy is slowing down, which could be a problem for our economy. So there are two sides to that we have to keep an eye on.
Going back to China specifically, though, the thought was by some people that the U.S. and particularly individual investors would be pretty well insulated from what was happening. And now, when they see numbers like that at the open, that doesn't seem to be the case.
Well, I think there are two factors at work here. One, as we say, the market was due for a correction, and sometimes it just looks for a reason to correct. And this was a pretty good one. It may have overcorrected at this point. That's not clear. But the Chinese, it will affect exports if the Chinese economy, is slowing substantially. And that will hurt us to a certain degree. Not to the effect I think you're seeing in the markets yet. And most other signs in the U.S. economy have been quite encouraging.
And so, Anthony, if you are an investor and you looked at the markets today and you're talking to your financial advisor, I was pointing out, I don't know if you were here when I mentioned this, we used to see charts where we would see money pouring into the market. Yeah. It was always at the very top, and money coming out of the market at the very bottom. In other words, investors reacting emotionally to the gyrations of the market.
It's entirely natural, as you know, Vlad. And I mean, I think we all have that. Jill Schlesinger on CBS this morning described it as the angel on one shoulder and the devil on the other. And we all battle that, and most often I think we lose. I think ordinary investors typically make the worst decisions. They want to buy in when everything is red hot, and they want to sell when everything is not. And it's kind of the opposite, really, what you should be doing, I think. I mean, I think this is a very good time to look at a lot of stocks that you saw that were really hot before that are suddenly a lot cheaper. So I'd be taking a serious look at, at some companies right now and thinking, what, maybe this is a good time to buy them.
Get out of emerging markets, maybe.
Yeah.
Not the place to park your money right now, sounds like. No. All right, Anthony Mason, thank you so much for your insight.
Pleasure.
Really appreciate it.